You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Friday, May the 12th, and we've got a great show for you today. Here's what we got coming up if you're watching live. Today we're talking about IBM, Apple, Square, and WWE. Specifically the WWE Network. So if you're watching live, that's what we're going to be going over. If you're checking out the recap, those are the other videos that are going to be posted up today. So let's go ahead and jump right in. I want to talk about dividends and the power of dividend investment and how you can use dividends really for things. So hopefully it turns out well. We'll see. I want to talk about WWE Network and getting it for free with the right amount of money investing in stock. And this is going to seem crazy, but it is something you can certainly do, again, with the right amount of money. So WWE is a stock. We own it. We like it because it's basically a monopoly. And they pay a very good dividend. Now, using that dividend, I don't think a lot of people realize, they look at it and they say it's 12 cents, but that adds up, and with the right amount of shares, you could actually pay for your WWE Network subscription just by investing in them. So let me pull up a little, this is just a really quick an easy, dirty spreadsheet to kind of show you what I'm talking about. So I'll walk through it real quick here and show you how much you need to invest to get the WWE Network for free. And so I picked this one because the service is fairly cheap at, $10 a month, and their dividends high enough so that it wouldn't take a huge investment to make it happen. For some people, it's a lot of money. But I know there's people with this much and more sitting in their savings account, absolutely doing nothing for them. You need to put your money to work. So WWE stock price, it'll be coming across the bottom of the screen here. Any stock that we own tracks the bottom of the screen, but it's roughly been around $20. And they pay a dividend of 12 cents for every share that you own. So if you invested $5,000 and you bought 250 shares, you would get, every 3 months, you would get $30. And that would be enough to pay for all 3 of those months the WWE Network. It's really that simple. That money that you would normally have in your savings account, doing nothing, put it to work. Here it is. If you're a fan of the WWE and you have their network and you have $5,000 sitting in a bank account, put it in an E-Trade account or something like that, buy shares, sit on the shares, and take the dividends and pay for your subscription. Now, that is way oversimplification, and there's risk to whenever you buy stock. Stock could go down. So I put out a couple of scenarios here. And again, this is extremely just a quick overview, but let's just take 3 scenarios here over a 20-year period of what may happen with the $5,000. Okay, if we say I put a good scenario, a bad scenario, and an ugly scenario. So a good scenario is if they went up 2% every year. Now the average, I believe, for stocks in the S&P, I want to say it's around 4% or so. And of course, I'm just averaging this out over time. Year to year, it may be up, it may be down, but I think this is a decent average to work with in a very good situation. So if you took the $5,000, left it in there, collected the dividends paid out, at the end of 20 years, you would have $7,429. You would have paid for the WWE Network for 20 years for free, and you would have gotten a lot of money back. If they went down 2% each year, you would be left with $3,338, and you'd have the WWE Network paid for. Now, if they went down huge chunks like this, they would probably lower the dividend, but I didn't want to do too complex of a model. I'm saying that the dividend is in place because the chances of them just keep going down 2% or 10% in the ugly model is really unrealistic. They would be up and down adjusting for dividends because their earnings would come in, but bear with me here. Even if they drop 10% every year, you would lose your $5,000 and you'd have $600 left. Now, what the cost for paying for that WWE network would be $2,400 over that 20-year period. You would still be up, even if you would just use that $5,000 to cover your payments there. You would still be up in the case of them going down 2%. You would still be up $738. You'd pay an extra if they went down 10%, but and you'd be in a really good position if they went up 2%. If you didn't use the dividend and you just kept the money over the 20-year period, your $5,000 would almost turn into 10, et cetera, et cetera. Even if they went down 2% and they still pay the dividends, it'd be $5,700. So when you look at investing in stocks and you look at the risk and the reward and the likelihood of these scenarios, which scenario is most likely with a company like the WWE? Are they going to be around for 20 years? Are they going to go down 2%? That would be a pretty conservative estimate if you ask me what would happen with them. Even if you track their low attendance records in years, they're not going to drop 2% constantly every year. I would lean more towards the good, but even if they were in the bad situation, you would make out versus just paying for the WWE network yourself. Best case scenario, you get extra money and free WWE network. I hope this conveys the power of dividends. A lot of people don't take that into consideration when they're looking at stocks. That's why when I invest in stocks, they pay a dividend. I want the income from those stocks, and it adds up over time. As you can see, investment in WWE, you could pay for their service, or you could just collect the money and invest more. When you start using the drip, where you reinvest it in the stock into more shares, you can actually compound your gains. And we'll do a whole other video on that at some other time. But let me know what your thoughts are on using your dividends to pay for your services. I think I'm going to wrap it up for today. Hopefully I can get over this cold and we go in through the weekend. But thank you very much for watching. If you're watching the recap videos, give us a thumbs up and subscribe if you haven't already. We are pushing to get that 100 subscribers. We're just starting out, trying to grow here. Love it. That'd be great this weekend if we went over the 100 subscriber mark. Let me know your thoughts, feedback on the show. Really want to grow it. Let me know the types of articles you like to see or some of the videos we do. Put it all in the comments. We're trying to figure out the best blend of stories to do during the show and things like that. So thank you for watching. We're live 1:30 Eastern, 12:30 Central. Tweet us at InvestorXP or shoot us an email. It's mail@investorxp.com. We'll see you Monday. Thank you for watching.